Good afternoon, this Tuesday, July 14th. Today, we want to stop and take the time to understand what's going on over in the Black Sea region. As you know, Ukraine has been making deep inroads into the country of Russia, bombing all the refining capacities, causing shortfalls of diesel fuel for basically farming is a problem. And of course, their construction work that they need to do, they're scrambling for that. Well, at the same time, they're also bombing their imports and infrastructure to getting the wheat out from their country, which the harvest is now getting underway. The grain is headed for port, and they're going to start loading ships. In some cases, they are. But they're not necessarily transversing the Kerch Strait or the Kerch Bridge. We'll get to that in a moment here. And so there is a concern with traffic being held up right now that a shortfall of cheap, abundant wheat coming out of Russia, and for that matter, Ukraine, could be on hold for a while, especially as Ukraine today had seen bombing in one of their ports on vessels from Russia. Russia also now is looking at hurting them and their revenue infrastructure when there had seemed to be, there was this natural truce between the two when it came to food and, for that most part, energy. That seems to be changing as they're both dialing it up to get some kind of peace deal at the table sometime soon. But when? Does somebody get hurt first before this occurs? So let's take a look at where the wheat's grown in Russia and where it has to travel through to get out to the world. And then we'll see what the charts are doing. So first, we're going to take a quick look at Russian winter wheat production, then spring wheat, and then as a total. And as you can see, about 56% of the production of their winter wheat is grown just east of the Ukraine. Then, of course, you have the central and the Volga regions, and of course, the Urals here. Not much is grown there because that is where the spring wheat production takes place. 28% of the wheat is spring wheat production, about 22 million metric tons. You can see the Urals and Siberia. A lot of that wheat's grown there. You might say, hey, why does that look like it's in the south? It's not. When you overlay Siberia and the Urals, now you can see it's near the Arctic Circle, so to speak, and that's why production is spring wheat up there. But that too needs to be moved to the port side. Now, we talk about the Black Sea. Many people say, well, why doesn't it go out the Caspian Sea? That's because it's a landlocked sea. Yes, it's a few ports where it delivers to, but the wheat cannot get out of here. So now we go to total Russian wheat production. And when you look at it this way, you start to see how the spring wheat, not that big a deal. And most of this wheat is grown, central and southern areas right up against Ukraine into the Black Sea, which now brings us to the problem of getting the wheat out of there. Now, we have deep water ports that are outside of the Sea of Azov, because we've been talking about the troubles in the Sea of Azov, and in that is shallow ports that they load the ships out of, and about 33 to 40% of all the wheat comes out this way, through the Crimea bridge called the Kerch Strait, the Kerch Bridge. There's a bridge that goes over the top of this. And of course, the deep water ports, the biggest one is Novorossi. A little quick play here for you on words. Novorossi means New Russia. How many have heard the term Ruski? He's a Ruski. Well, when they came over to the New World here in the U.S., they called them Ruskies. Okay, so there you learned something for today. A Ruski comes from Novorossi. This is the biggest deep water port to get the wheat out of Russia. Now, you could say, well, why don't they just bring all the wheat out? If this gets jammed up, bring it all out. It's not that easy. First off, this is a large landmass, and it looks very small on this chart. And they frankly don't have the diesel to basically apply to trucks and railroads to get this out to these deep water ports. So they need to keep these channels open. So once this wheat gets out and through the Kerch Strait, which Ukraine is gladly throwing missiles and drones after, and they've tried to take out the Kerch Bridge. Anybody remember the Baltimore Bridge when that went down? If they can get the Kerch Bridge to tumble, that small channel where these deep ships have to go through, oh boy, that's a problem. Look how long it took to get the Baltimore channel open. And they work 24 hours a day, 7 days a week, and that was multiple months. So what they're trying to do is just intimidate the ships that keep them slowed through here. So where does it go once it finally enters the Black Sea? Well, first off, we come in through here, and it's got to head to the Bosphorus by Istanbul, which is also where Odessa, Chernovsky, and Pendivi, I can never get these quite right, they're shipping all their wheat out that way too. This red line denotes the UN grain initiative route that was agreed to be safe, but Russia didn't say they would stop pelting any of these ports. And as they did overnight, several ships were hit in the Odessa port area. So now, once this wheat moves out, it leaves through the Crimea and it's onto the Istanbul Bosphorus and then out through the Aegean Sea. And then, of course, from there, we carry it into the Mediterranean. And from the Bosphorus, there we go, I had to find my Bosphorus. From the Bosphorus, we head out and on our way to either into Europe or other areas that are asking for the wheat. And that is why this is such an important port and seaway. So what happened today? Well, let's take a look at September French milling wheat. First off, here's the drought. Really didn't care about the drought. Here's more drought talk in Europe and France, and nobody really cared about it until last week, Friday, when she lit up on the first signs of trouble. Then they tried to wreck it yesterday a bit, but today, new highs. Closing 217, the highest close ever was 217 and a half back here in March. So it only takes another $0.50 or more on French milling wheat to make new high closes. And after all, the price is not set on the spikes, it's set on the closes. And so a new high close tomorrow would tell you the concern and earnest problems that are developing for wheat. And this is French milling wheat. Imagine all the buy stops that get triggered by index funds if we go through that. Interesting, isn't that? So now we come home to Chicago. Chicago, oh, they did a good job after our initial highs here back in May, busting the market as we always do into harvest for the spring, for the crop, especially in Kansas, where all the wheat's hauled into town and sold at huge terminals. We had troubles at the 625 range that stopped it. That was until Friday. They ran it up, busted it yesterday. We were long this wheat from 609 and a half. And of course, I did not think they were going to take out a previous day's low because this thing would be so strong. No, they had to stop us out with a $1,200 gain on our spec trade because they had to take out a previous day's low. And then, of course, pushed higher. But we came back in at 640 and a half today. I think the settlement's going to be 645 going out. But still, as you can see, the 78% retracement probably is the target of this lift in this fear mode right now, which should suggest 660 to 665 is where we're going to head to, if not to new highs, if French milling wheat has any say to this, and we see further intensifying of the fighting between Ukraine and Russia to bring something to the table. But I guess somebody's got to get hurt even worse now before something occurs there. Kansas City wheat didn't quite make the 62% retracement already that Chicago did, but here too. They had to bust this thing down overnight before rallying it here into today's close. First stop here, something near $7, and then $7.20. And now I'm on record that I believe once we already have our harvest low in, that we're going to work this wheat market higher into November. And I have it already stated we're going to see December KC wheat trading at $8 or higher. Well, that's kind of easy to do when you consider how this thing is played out on the weekly continuation chart. We had our multi-year support. Prior highs became new support. Holding this thing all last year, we've been looking for support, below the $5 mark in that 480 range. Finally took off, went and stopped right at the May 2024 high, went to 650. We made wheat sales up in here. And then here came the break. And the break found legs at 50%. Which also kind of lines up with previous highs. Isn't it interesting how that stuff works when prior highs become new support? And now we're probably launching another new rally from there. Will we struggle at 650? Oh, I'm sure we will. The funds can't help but to sell prior resistance, get a pullback. But if things aren't healed up over in the Black Sea region, we're going through. Oh, and by the way, what is going to become of the harvest out of Australia, because they have to get through their growth stage. And we know that the El Nino is in full force right now and can affect that wheat crop here going into August. So who knows how that plays out. But nonetheless, we are in an uptrend cycle on these wheat markets, including Minneapolis wheat, which today again hit 660. Isn't it amazing? Prior resistance became prior resistance until that explosive move that we got out of Kansas City into the early May highs. And of course, you look at our track records, we sold out up in here, and now we collapsed and didn't quite make it to trend line support. and turned up. So it doesn't take a rocket scientist to figure out what happens if you get two closes over 660. It implies further strength. So we'll see how that develops. If you're getting value from this video and want more, just check out our daily newsletter. Each morning, we send a market summary to start your day, plus deep dive analysis, trade alerts, breaking news, and videos just like this. Whether you're a farmer, trader, or just tracking the markets, it's a great way to stay ahead. Start a free trial by scanning the QR code on screen or clicking the link in the description. Call us at 701-222-0221 or visit heartlandinvest.com. Now let's move on to cattle. August live cattle today closing below important support near the June low at 234, opening up a can of worms here of further losses. So now we go to our live cattle daily chart, which this is ugly looking on purpose because I had to jam it really tight so you could see something. And I wanted you to see my moving averages here. See this pink line? This pink line, as you can see, going all the way back to the bull market started in 2021. You know, it's a hit, goes up. It's a hit, goes up. Little bit of spike, goes up. Hits it, hits it, hits it, spikes it, and turns up. And I also want you to see the trend line like I started in the fall of 24. After that wreck, we have a trend line that went in place, tags it, and now will we be tagging it again soon? We'll find out. So now we're going to zoom back out so we can see this. Now today, that pink line is just under 228, 227.56 right now is today. That is the 35 period on this, and it's exponential on this daily continuation chart. Now, October was trading this area today. And of course, October will be the next chart to come on the continuation. So these data points, a lot of times, have help into the future on other contracts. Now, if we falter with tomorrow's October contract and it can't hold 227, it probably means August is heading for this for some major support. And of course, do or die for this bull market is the trend line support in about the 221 range. Now, keep in mind, those other ones I had shown you since the bull market got started, we maybe jab it one day and we're turning up. So what I'm saying to you is these are all corrective and can still get recovery rallies into the fall, yada, yada, yada. But if we close a couple of sessions below this trend line, it means the bull market's done. Now, how in the world could that possibly be? I don't know. Other than Trump pulling all tariffs on all imported beef and let everybody import their beef into the U.S. at whatever prevailing cash price, and there's your wreck. Okay, I'm not saying he is. I'm not in the $1 Million Club that donates to get all this inside information, because I certainly believe there's something going on outside that administration. By the way, I voted for President Trump 3 times. I even donated to his campaign against Hillary Clinton. So I have a right to speak when he is out of line, so to speak. And whatever he's doing is, if Obama was doing this, you'd be screaming socialism. And now President Trump is trying to run economies rather than let capitalism run economies. And that's where we're running into trouble here. And I don't know what's going on, but I do know this. The market is in a wreck right now, and we have to respect that and know that. Now we go to feeder cattle. For longtime subscribers, ever since this October low, I said this is going to be a right shoulder over head and shoulders top. And I said, why would we not have the longest running right shoulder ever in the oldest and longest running bull market in the history of cattle? Or I should say the biggest one in cattle. Well, that's what we've had, and we are breaking down. And now we are at the moment of truth here today. And we're going to drag this moving average out so I can give you confidence in this thing. And we're going to drag the trend line out in a moment. But I want to show you is today we hit the pink line. We held into the close. Maybe there's a bounce coming tomorrow. Trend line is down now at the 346.5, 347 range. And so what I'm telling you is when we see how these pops below trend line are only one day, you get a couple day closes below this trend line. This thing is a wave 3 to the downside as this market comes apart at the seams. So let's go do this crunching thing here. Here's that pink line going all the way back to the beginning of the bull market. Look at how it touch. There's a couple spikes there, but they rock. Touch. That was a bad one there, fall of 2023, that wreck. But then once that was over with, touch. And then the 24 wreck kind of registered in there. And then we start the trend line off of that one. And you'll see when we zoom out where we get to present day. But once we bring this back into play, you see it. Pink line can get beat up. Pink line can get beat up. But the trend line is a one-day thing. Trend line's a one-day thing. So you can see what's developing here. We break down here, take out the trend line. We have a wave 3 objective near the 786 retracement of the fall low at minimum from our high near the 315, 320 range. Let's just make it a range. 315 to 320 is the 786 if we get a couple of closes below the trend line. Again, what would this be? Maybe President Trump overriding U.S. Secretary of Agriculture Rollins and saying, open up the Mexican border before we lose a bunch of commerce to Mexico, and they have cheap help down there working in their packing plants now 24 hours a day, building out of feedlots down there, utilizing cheap Mexican labor. Then, of course, they're learning from JBS because they have a deal with JBS buying beef from them, that JBS teaches them how to export beef into the U.S. in a grand way. We don't need that. Okay, and I get it. I'm a cow-calf man, grew up on a cow-calf farm. Yes, I like high prices. Yes, it's a lot of work, but we got to find a medium ground so we do not cause our red meat, so to speak, demand to fall off more than it's already fallen off in recent months. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.